Alrighty, hey guys, today in this video we're going to be going through yesterday's London session, bit of a review. Now I do have a video, I've got to re-upload it unfortunately, it's 50 minutes long, and essentially I was tape reading and demo trading this move to the downside. So two trades, partials, break-evens, full TPs depending on which trade we're talking about, and that hopefully should be uploaded by this afternoon, all going well, but it's 50 minutes. So what I thought I'd do, if you don't want to watch that whole video, that's completely fine, and I'll try to put timestamps so you can scroll to different sections. But this video here is essentially going to summarize before that trading session and also that trade that I took, or the couple of trades that I took on the demo account, so I can talk about all those things. And I might even mix in some of my strategies for London session, right? Because I've talked about the New York AM session, but not necessarily the London session. So first and foremost, this is where I started yesterday, right? When I was looking at the charts, I mark out the Asian session highs and the Asian session lows, and I look from 7 till 12. That's all I look for. That's all I look for. So 7 o'clock is like back here somewhere, right? And 12 o'clock is like somewhere here. So this swing high is the first swing high within that period. So I've marked that as the Asian session high. And this here is the earliest swing low, which is the Asian session low. So I mark the extremities, or the end points, the Asian session highs and Asian session lows. The next thing I did as I was reading price is I saw this movement down, and this is what I call low resistance buy-side liquidity. It's also what I call trendline liquidity. So as an ICT trader, you're trying to target or do the opposite to retail traders. And if you can get a setup that yields that, even better, right? So trendline liquidity, if there was a retail trader, they're seeing this as resistance. So when price comes and taps here, they're going short. When price comes and taps here, they're going short, which means when price moves down here, they've got their stop losses above these swing highs, which means that's where I want to target if you're taking those trades, right? The second thing I want you to look at is 2 a.m. to 5 a.m., and that's New York Standard Time, which is UTC -5 or -5. That's when I'm looking at taking trades. Sometimes I've taken trades pre-market, and if I do that and it's still technically Asian session leading into London, then I'm reducing my risk. 95% of the time, 98% of the time, that's my time frame I'm looking at, and more specifically 2 a.m. to 4 a.m. So that's what I'm looking at now. This is just a 1 minute time frame. So what I'm going to do is I'm actually going to get up a new chart just so we get rid of some of that analysis and we can go through a clean chart together. And we're going to do some top-down analysis on the day and on the session and how I'd kind of look at the price, right? So here's your London session I was talking about. And I'm just going to zoom in a little bit so the candles look a bit nicer. Now, what I like to do, I like to go the 15 minute, right? 15 minute, and I work my way up or work my way down depending on what I like to see. Now, obviously we've been bearish. Like the 15 minute can tell you that we've been bearish for multiple days. Even if you go into the 4-hour time frame, we've had a shift in structure. Like look at this, we've had a shift in structure on the 4-hour time frame, and we've left this bearish gap, like a breakaway gap, and we've taken out swing lows. Even on the daily time frame, right? I'm going to try and keep this video under 10 minutes. 10 to 15 minutes is what I'm aiming for. On the daily time frame, we are returning to this fair value gap, which if we have a look at price, we close below. So my assumption is that, you know, this might be the next draw on liquidity. And if you look on the weekly, right, so you can even go up in time frames, look on the weekly, you can see there's a massive weekly fair value gap. So that's kind of what my eyes are on, this weekly fair value gap, how we close in the week, right? And that's top-down analysis, bearish. All this 4-hour, daily, 15 minute, it's bearish, right? So the higher time frame is bearish, high probability trades are bearish, but you still can take long positions, right? That's completely fine. What I like to do is when I'm trading, and let me just go back to the 1 minute time frame, just so we can zoom back to the London session. What I like to do is I like to look firstly on a smaller time frame just to see if there's anything that's built up, right? And like I mentioned in the last kind of slide that I had, all of this is trendline liquidity. So I mark out this trendline liquidity. I mark out this as my Asian session high. So this is what I do for every London session. That there is my Asian session high. And then I mark out my extreme Asian session low. So I mark out the extremities. Doesn't mean price has to get it or tag it, but I just want to know where we're sitting in between the Asian session high and the Asian session low. Because often, once you raid one of those points, you target the other, right? So Trendline Liquidity, that could be a nice little target for us. Asian session high sits above. So I start to, I guess, build a narrative in my head that price is coming down like this. Is there a point over here that we might react off to then take out the Trendline Liquidity and take out the Asian session high? So I've showed you that top-down analysis, everything leads to bearish. That's on a higher time frame though. Doesn't mean I can't take buys. If there's a clear liquidity point, I'm happy to take buys. And for me, that Trendline Liquidity plus the Asian session high is a clear target of liquidity, right? Because that there is just screaming out to be taken out, because that's your retail trader stop losses. Cool. Now let's go to the 5 minute. And what I saw yesterday was this, right? We took out this level of sell side, right? So we raided that sell side liquidity. So I'm going to say raid of sell side liquidity. Now, these two candles here, I would class as an order block. They're the last two candles, and what validates these as an order block is this green candle here when it closes above, right? That indicates a change in the state of delivery. So what you could see this little run down as is a fake little run down to then trick people to go short, so then we can take out the buy side liquidity, being these swing highs and this Asian session high. But this is an order block, and I like to use the bodies. That's just me personally, especially when it's on a 5, 15 or higher time frame. If I'm using 1 minute order blocks, I like to use the wicks as well because it's obviously a small time frame. So that there is a bullish order block, and you might see, you know, people, I do this myself, OB positive just means bullish order block. So price took out that sell side, we tapped into that bullish order block. Any kind of PD array, right, whatever it is, I like to mark out the 50% level, and notice here how the price doesn't even reach there and then we immediately close, right? So when this candle closes, I'd be looking for longs. Now, the only issue is this isn't in London open session. It's still technically Asian session, right? So if you're basing your trades on time, this would be something that you're just tape reading with the anticipation that you're going to take out this liquidity here. If you're okay with entering outside of these time frames, then that's what you can do. It's all a personal kind of choice. So if we go back here, that there is the 5 minute bullish order block. And you can see we raid that sell side liquidity, we raid that sell side liquidity, and then look at the reaction. Like we close above here, and the reaction is to take out all of this trendline liquidity and take out those Asian session highs. So anyone that was going short here is punished. They're punished, right? Now I was tape reading this move, right? And I was testing out a move as soon as that candle closed on the 5 minute, going short with my stop loss below this bullish order block, right? So it looked probably something like this. Maybe something like that, stop loss below here. And you can see if you've got a fixed risk to reward of 1 to 2, you don't need to target that much. If you wanted to take partials, well, there's opportunities at each of these swing highs to take partials. Or you could leave a runner to the Asian session high, right? Up to you. So that's kind of how I see things. And this is the 1 minute. So what I've done here, I've done my larger time frame analysis. We know that's bearish, but on a smaller time frame, because we're scalping, there's an opportunity to go long here. However, this is not within the London Open session because London Open starts at 2 o'clock, which is roughly about here, right? London Open is here. At this point of London Open, we've taken out the Asian session high. So at this point, I'll just be observing, right? As soon as we take out the Asian session high, I'd be looking for some kind of higher time frame PD array to be tapped into. So that's when I go back to different time frames, and I like to use the 15 minute. The 15 minute ICT calls it like the bellwether chart. It's one of the most important charts to use if you're trading on the 1 minute time frame. And what grabbed my attention yesterday, we took out the Asian session high. There was this bearish fair value gap here. I'm just going to extend that across. That bearish fair value gap and this buy side liquidity point. So in my eyes, we swept the Asian session high. I was waiting to see if we'd want to reach past this high here, which was our buy side liquidity. And then what I was waiting for is a reaction to the downside after taking that buy side liquidity. So what you can do is you can go down time frame, say you go down to your 5 minute, and you can actually narrow down that fair value gap, which is what I like to do as well. So see, that's the 15 minute fair value gap. This here is now the 5 minute fair value gap. which rests above this swing high. So now I can get rid of the 15 one and I can leave the 5. So this is often what I do, like I narrow it down, and that way it's a bit cleaner in the charts. Look on the 5 minute, look how clear that looks. Look at that, beautiful. Like even on the 5 minute, we take out that buy side liquidity. We have a shift in structure, right? Technically that could be classed as a swing low. Here we have a shift in structure, right? Price just comes back down into that gap, bounces back up, returns to order blocks here. Inversion fair value gap on the 5 minute, which is here. So that bullish gap gets disrespected, and then we sell off, right? So if you're a 5 minute trader, there's opportunities there to go short, right? And these shorting opportunities are still within the London open session, right? Up until about this point here. So you've got multiple opportunities to go short and to ride the wave down. Now, for me personally, I don't really like executing on the 5 minute. I like executing on the 1 minute, but I like the 5 minute just to watch price. And then as soon as we take out that high there, let's go into replay. As soon as we take out that high, I'd now be watching on a smaller time frame. Like I'd just go back to the 1 minute. So I'd be watching here, right? And what I'll be looking for is to see, do we respect this 5 minute imbalance, right? Do we respect it? So I'll play this out and I'll talk through my thoughts as the price was playing out here. Now, nothing as of yet signifies to me that we want to go lower, right? Nothing as of yet. We've created 2 equal highs here, and what I mentioned in my other video was this. As soon as I saw this, I thought the power of 3. I thought, okay, we're getting some accumulation here. That could be the manipulation up, because imagine people going short from here. Retail traders see that as resistance. So that is your manipulation move. And then I'll talk about this in the longer video, so when you watch that, have a bit of a look as it's happening, and that there could be your distribution. So what I'd need to see now for me to enter a trade is a couple of things, right? So let's have a look at price action. Let's see what it does. And it's important, this next candle. Notice this next candle closes below this bullish gap. From this candle's high to this candle's low. So that there becomes an inversion fair value gap. Now, there's multiple ways you can trade inversions. And maybe this is something to write down. And we'll write down a bit of a summary of what we've seen, right? Asian buy side has been taken. We've swept further buy side liquidity. We have the power of 3 potentially playing out. We're respecting the 15 minute and the 5 minute bearish fair value gap. That is also called a SIBI, a sell side imbalance, buy side inefficiency. So I'll use that name interchangeably. And now technically we've got an inversion, so an inversion fair value gap. So notice how there's multiple confluences. So what some people do, they enter as soon as that candle closes, right? Stop loss above that high, 1 to 2 risk to reward, right? And let's play that out. Let's see if that works. Let's play it out, and then we'll talk about different ways you can kind of target what you're doing, right? There you go. There's your 1 to 2. So that's one way to enter off an inversion. Another way to enter, if you have a bit of a look, let's play this out again. Candle closes, you wait for price to return to that inversion. So that there is your return. I think this next candle as well returns. And again, you set a limit order. Now, would you get triggered in that limit order? Maybe, depending on the broker that you're using in the platform. But that's another way to enter. And again, you could have a fixed risk to reward, and you could just get a 1 to 2. So that's one kind of box that I want to talk about. And I think another important thing is entry models using an inversion fair value gap. So number 1 is entry after candle close. And number 2 is entry when price returns. Price doesn't have to return though, so that's kind of something to keep in mind. So if you enter multiple contracts, you could enter one as soon as that candle closes, and maybe you could enter another one here. Another thing that I point out is that, see this bearish gap here, right? That bearish gap lines up with a fraction or a portion of this bullish gap. That there is referred to as a balanced price range, or a BPR, right? So that there is referred to as a BPR, and it actually becomes important later on. This here is an inversion fair value gap, right, which you can see. And let's play this out, right? So we've got accumulation, manipulation to take out these stops, and now we distribute lower, right? 1 to 2 risk to reward is one way we can actually get those take profits, Or you can use, this is another way to do it, grab your Fibonacci, this price leg that raids liquidity, and then this is all you need on your fib. People ask me all the time, 0, 1, 2, 2.5, easy. And you take profits between 2 and 2.5. So there's a swing low here, roughly. There's a fair value gap here. There's another swing low here. That's where you can take your profits. But you can see, we look at price reaction. Look how it reacts. It comes into that 2 to 2.5 level. Actually retraces, and I'm going to extend this out in time a little bit. This might end up being like a 20-minute video. And look at the price reaction in that BPR, right? In that BPR and that inversion gap. So we come back down to the 2 to 2.5 level. That's where you can expect some kind of retracement or reversal, which does happen. If you had stop loss to break even, which is what I did, my stop loss is above this high. I took some partials here and then I got stopped to break even. The second entry would have been from here, out of this BPR, right? Straight away, enter there, stop loss above this high, which actually gives you, potentially a better entry than last time. Where could you take profits? At this swing low, at this swing low, and we'll see how price plays out. So this particular day in London session, it was a multiple entries situation, right? Now what I want you to do is somewhere here, spot the BPR and spot the inversion. Look at this, right there. That's your BPR. So that's a secondary BPR. So this day it was like inversions and BPRs. That's all I was doing. And what I liked about this was that, see this low and this low, they're relative equal lows. You can't leave those in the market, right? That's a massive draw on liquidity there. So relative equal lows. This might end up being like a 20-minute video, but I think there's a few things to cover here. So we play that out and we'll just watch price and we'll see how price reacts here, right? Look at this reaction. Look at the reaction here out of this BPR. You can't make that stuff up, right? The body's closed within, the wicks do the damage. The wicks do the damage. And eventually we take out those relative equal lows. So in terms of entries, inversion fair value gap, number 1. BPR inversion fair value gap, number 2. BPR, number 3. If you're looking for a silver bullet trade, this would be your entry and this would be your entry. This here is, I guess you could call it a London Open trade. Now, one thing when trading London session, which back test this for yourself, forward test this, and this is what I personally do. If I'm in a trade right before 3 a.m., say it's 250 and my target hasn't been hit yet, but maybe I'm at like a 1-to-1 risk to reward, I always take partials and move my stop loss to break even, right? Just in case. Because what you notice here, just look at this, the 3 o'clock candle, like the 259 and 3 o'clock candle, 3 o'clock leading up to about 3:10, the first 10 minutes, there's a lot of volatility injected into the markets and a lot of volume. So that can sometimes shift direction in price, but it can also sometimes stop you at a break even, which is better than a shift in price and taking no partials because you wanted this low to be taken. And then imagine you sweep that higher once more by a tick, then you'd be really angry, right? So you got to manage it. And that way it's just a relaxing process, right? Once you've set your stop loss, take profit, and you manage your stop loss as you go along. So if you watch my longer video, I talk about how I'm dropping down my stop loss. So once we take out this swing low, my stop loss was above this high here. I didn't want to see that taken. On this second trade, once we take out this swing low, right, my stop loss has moved down a little bit. And then after that, I left my stop loss just here, right? I covered costs because these relative equal lows were too clean. And this is called like pyramiding. When you can enter multiple positions for the same trade, it's called pyramiding. So I hope that kind of gives you a bit of insight. Look for these things. That's why we entered the trade. This is how you can use an inversion. And this is just my experience. If you're in a trade, cover your costs, take partials or go for a fixed risk to reward, whatever works for you. Everyone's different, right? Sometimes I just go for a 1 to 2. I'll leave everything as is. Other times I'll move my stop loss after 1 to 1. It all depends on what price is showing me. That's all it is, right? We've talked about standard deviations here. So I'm just going to write some of these things down. We've talked about standard deviations for TP levels, or where you can expect some kind of reversal, and you can see how that played out here. We used the leg that creates the raid. We've talked about the power of 3. We've talked about inversion fair value gaps, balanced price ranges. We've talked about Asian highs and lows, right? We've talked about all that kind of thing. And just so you can see, let's just play the price out. Let's just play it and we'll speed it up. Again, London session, open session closes at 5. And you can see here what's happening. Look at the price. So we start off with one pool liquidity and we target the next. So remember, this here is our Asian session low. We've taken our Asian session highs. I'm anticipating the Asian session low to be taken out, which would also go with our higher time frame bias. So taking along here, if you're trading from London Open, it doesn't matter if you miss that, because if you take a short here, you're going with higher time frame order flow as well, right? So have a look at price. All we're doing here, by the way, there's a 5-minute fair value gap here that we bounce off and we come above again. And just have a look at what price wants to do here. Right, we're spending a lot of time in this zone. Right, a lot of time in this zone. And we actually muck around here. Now we're outside of the London open session now, right? People that trade Forex, they sometimes trade the New York Forex kill zone, which is a bit later, before technically a silver bullet. But this is price, right? As price does its thing, you can see we're generating all this liquidity at the top too, right? Which is something that, you know, to be mindful of. And this goes on and on and on and on, and you can see here what happens now with price, right? Here's your Asian session low. Look at that. So I hope this kind of illustrates a few things, right? Look for liquidity to be taken. Asian buy side, Asian sell side. Now, I just want to say one more thing, because this video is getting quite long, but you don't have to trade after the buy side or sell side has been taken. You can trade with the idea that we're going to target that liquidity. So that's what I'm talking about here. So if you believe, right, that this trend on liquidity is the draw on liquidity and this Asian session high is because of this reaction up and this market structure shift, then by all means you can target liquidity. But if you want to wait until liquidity is taken and then see reaction from that, it's, I guess, a second check. You know what I mean? And this trade here, like if you're in a trade and let's say you left a runner, like let's say you entered here and you left a runner, or you entered here and you left a runner to Asian session low, you can imagine like the risk to reward on that. It's a massive risk to reward. And the fact that we use this imbalance, right, and we respect that multiple times is just interesting. So I hope that kind of gives you a bit of insight. The other video should be uploaded later on today, hopefully. But this is just a summary of the trade.